Construction costs across Australia are telling a complex story right now. While some states are seeing material prices stabilise, others are grappling with persistent labour shortages that are keeping costs high. But despite these challenges, sectors like infrastructure and data centres are showing signs of growth. The key to success in this environment is understanding the nuances of each market and adapting your strategy accordingly. So, in this video, I'll explain the key insights state by state and how these trends will impact you. Specifically, I'll cover the current state of construction costs in each major city, which sectors are thriving and which are struggling, and how to adjust your strategies to mitigate rising costs. Ready to dive in? Let's go! I'll start with Sydney, which seems to be looking a bit dicey. Unfortunately, the construction industry is still wrestling with labour shortages and some materials are hard to come by locally. While the labour market has eased slightly, finding skilled tradies is still a nightmare, especially for critical trades. The focus has shifted from immediate pricing worries to concerns about the future sector growth and diversifying projects beyond traditional areas. Infrastructure, energy and utilities, data centres, and the industrial sectors are driving growth. But overall, construction output is expected to decline in 2024 due to high interest rates, steep construction costs, labour shortages, and a downturn in residential construction. As a result, contractors are playing it safe by adding big contingencies to their pricing to cover potential risks. Given the current market conditions, there is a bit of a better safe than sorry approach. Moving on to Perth, where their biggest headache is still the lack of skilled labour. Experienced tradies are retiring, leaving a skills gap that will take time to fill, even with the recent uptick in apprenticeship. There's also a push for new enterprise bargaining agreements, EBAs, for many trades, which could shake things up, especially for the big contractors. On the bright side, costs are starting to stabilise. The rate of increase is getting closer to the historical average of 3 to 5% per year. However, the high starting point is making it tough for many projects to get off the ground. Some materials like plasterboard and concrete are still seeing price hikes. Copper cable is also getting pricier, but some clever contractors are bulk buying in advance to dodge these increases. Looking ahead, there's a big pipeline of social infrastructure projects on the horizon, including major investments in schools, hospitals, and social and affordable housing. Melbourne's construction industry is still buzzing with activity, but it's not all smooth sailing. They're dealing with company insolvencies, labour shortages, material price adjustments, longer construction timeframes, and increased fees and charges. The good news is that material prices, while it's still trending upwards, are showing signs of steadying. The infrastructure sector is still the big driver, with massive projects keeping things moving. The housing sector is struggling a bit and falling short of government targets. Insurance hikes in the residential sector are also expected to add more pressure to an already tough situation. The apartment sector is holding steady but subdued, with growing interest in build-to-rent developments. There's also a trend towards refurbishing CBD office buildings for potential residential use. Industrial, health, and aged care sectors are going strong, while retail and hotels are showing early signs of potential growth. Going down south, Hobart's construction scene is looking interesting, with the proposed new AFL stadium getting cross-party support. This could be a game changer for the industry over the next few years, although there's still some debate over funding and public opposition. The industry has seen a return to more sustainable activity levels, but this might be masking a backlog of stalled or upcoming projects. Hobart's small industry means a few large projects can quickly swing things from a weak market to an overwhelmed one. There's some good news on the social housing front, with an increasing number of projects underway. This should help address the housing undersupply and provide ongoing work. Darwin's construction industry is still riding a wave of growth, thanks to ongoing investment in defence and infrastructure upgrades. Major defence projects include new mess facilities, accommodation blocks, and upgrades to various bases. A new $100 million hotel at the Darwin Convention Centre is set to kick off in Q2 2025, and work has started on the first multi-storey apartment building in the CBD in 7 years. However, rising construction costs remain a worry for both public and private sectors. While material prices have stabilised, there's a labour shortage across all trades, which is driving up prices. The private sector is experiencing a downturn in investment, with developers struggling to make projects financially viable. There is forecast to be a 6% increase in construction costs in Darwin across the rest of 2024. Moving on to our capital city, Canberra's seen a dip in residential development approval in the first half of the year, likely due to housing affordability issues. However, recent government measures including stamp duty concessions and investments in social and affordable housing might help boost demand. The civil sector is expected to remain heated, with significant funding for projects like road and district playfields. They'll likely continue to struggle with resourcing and may need to bring in personnel from outside the region. Both federal and ACT governments have committed significant funds to commercial, educational, health, and social infrastructure projects over the next 5 years. This is expected to keep the commercial sector running at or above capacity, which could pose procurement, staffing, and delivery challenges. On to Brisbane, which has seen a slowdown in the rate of construction cost increases compared to late 2023 and early 2024. Building approvals for both residential and non-residential sectors have softened to levels last seen in 2019. High interest rates and low falling inflations are contributing to a decline in private domestic dwelling approvals. The premium residential market is bucking this trend as it's less impacted by funding concerns. Population growth across Queensland remains the biggest driver of demand for construction-related products, affecting a wide range of sectors. While there's been a decline in tender activity, overall activity levels remain strong. Labour cost increases are likely to be the major driver of cost escalations through the second half of 2024 as new wage agreements come into effect. Back down south, Adelaide's economy has been performing better than most other states, with steady population growth and strong employment growth. However, economic growth has slowed and is expected to remain so for 2024-2025. While inflation has moderated, it's still above the RBA's target, impacting project feasibilities and causing some projects to be put on hold or even shelved. The abolishing of stamp duty is expected to help the single residential dwelling sector, which has seen a decline in approvals. The medium density sector remains steady, with new starts in the pipeline. Some developers are focusing on opportunities in the social and affordable housing sector. The industrial sector is showing strong growth, providing a range of facilities for various enterprises. Infrastructure, particularly power, sewer, and water supply to new developments, is becoming problematic, impacting the handover of completed projects. The key takeaway from Rawlinson's mid-year report is that construction costs across Australia are still on the up and up, putting the squeeze on the property market and construction industry. It's a bit of a mixed bag, with each state facing its own set of challenges, but labour shortages and rising costs seem to be the common threads. To continue withstanding the current environment, builders might want to think about tweaking their pricing strategies, bulk buying materials when prices dip, and look for ways to streamline their processes. Developers could benefit from reassessing project feasibility and exploring alternative financing options. For home buyers, it's all about budgeting for higher costs, being open to existing properties, and keeping an eye out for government incentives. Investors might want to rejig their investment criteria, focus on value-added opportunities, and consider branching out into different sectors of the property market. The name of the game is flexibility and adaptability. Those who can roll with the punches and think outside the box are likely to come out on top in this tricky market. But tackling these challenges isn't always easy, especially when the industry is facing unprecedented disruptions. In fact, did you know that over the last 2 years, An Australian construction company has filed for bankruptcy every 24 hours on average. If you want to know why, we've done a deep dive into the key factors behind the crisis, which you can watch in our latest video. See you there!